Hey, this is Tom, and there's so much to talk about. Let's just jump straight into it. Michael Burry issued a massive warning to the market. I just finished reading the 13F filings filed to the SEC on his behalf for the second quarter. It is insane. I'm either bamboozled or shocked or both. This is stuff that you need to know about because this is getting serious. Also, he just made a new crazy bet you need to hear about because this is all leading to the same place, inflation, or at least a high risk of inflation based on Michael Burry. I'll show you his filings and how this all comes together. Also, Peter Thiel has a new pet project which quadrupled in size. It's going ballistic. It's actually in cryptocurrency. Very interesting. I'm going to show you that. China is again regulating, over-regulating. Again, new guidance about regulation. This is getting out of control. Even prompting a response from Gary Gensler, again, going on video saying, hey, be careful from Chinese stocks. This is just Cayman Island companies. We don't know what's there. Also, we have some news coming out of 5 states basically saying, hey, we have record-breaking numbers as far as new cases. It's getting to the point where I keep telling you, I think it's rolling back. The reopening ain't happening that fast with these new variants. Also, Home Depot and Walmart, companies that usually we don't give a frick about, they just smashed through expectations. They have great numbers. And in this video, I'll show you why Walmart and Home Depot, of all companies, having such great financials in this quarter is actually a massive warning for more inflation to come. I'm going to show you why, how, and where. But I do ask of one thing. Don't click nothing. Don't smash nothing. Don't buy nothing. No courses. No sponsorships. Just give me your attention and let's just jump into it. We can start with Michael Burry because this is probably the stuff that you click on the video for. We'll start with that. And if you want to stick around for China, Peter Thiel's new project, Home Depot and Walmart, the new COVID issues, stay with me. It's going to get crazy. So as you can see on the screen right now, the Big Short icon Michael Burry has bet against Cathie Wood's ARK. Check this out. Michael Burry, famously known for his role in the Big Short book and movie, has revealed that he's made a big bet against Cathie Wood's ARK Innovation ETF, ARK. Burry's Sign Asset Management, that's the fund, issued a 13F. Basically a 13F, if you're not familiar with it, every quarter they have to file and disclose their positions retroactively for the quarter that's ended. So this is Q2, which just ended a couple months ago. Basically, he just revealed that he bought a shit ton of put options against ARK. This is crazy, but hold on a second. I want to show you the other stuff he's done and how everything falls into place. And what you're seeing on the screen right now is Michael Burry's 13F breakdown. Now, as you can see right here, the Tesla puts seem to have gone down from 39.5% out of his entire portfolio to only 35%. But that's not because of Tesla. Other stuff are involved. In fact, he actually doubled down, increasing the Tesla put by 34%. He's basically doubling down on the Tesla put. Also, he has a Facebook call, which he actually increased by 71%. Essentially the same thing he's doing with Google, as you can see right here, also increasing Google by 14%. These are calls. Now, he has a put on the TLT. That's the government bond. Essentially, putting the bond means that he's seeing inflation because when you put a bond, essentially what you're hoping for is an increase in interest, basically lowering demand for the bond, increasing the yield. I know that sounds counterintuitive, but that's how you do a put against a government bond. Essentially, this is a bet on inflation. Now, the most interesting part here is this part, ARK puts. These are completely new and they're not huge. They only represent about 1.5% of his portfolio. So nothing crazy. He hasn't gone ballistic here like he did with Tesla. It's nothing huge. It's a nice story. But as you can see right here, it's not as big as the Tesla, as the Facebook, as the Googles, even as the government bonds put. This is just a blimp on the radar. It's just 1.5%, but it's a very interesting development beyond the clickbait, beyond the headline. I think him putting against ARK means he's betting against companies which will most suffer an increase in interest rates and a reduction in their DCF valuations. Putting a call on Facebook and Google is essentially betting on inflation because these companies will outperform the market in inflation because of their high current cash flow. Now, he's also betting on Walmart in new position, 2.56. Now, nobody talked about that. It's not as exciting as Cathie Wood, but putting a call on Walmart, it's another indication of inflation. Also, a call on CVS actually is increasing by 31%. So he's betting on those companies which will do well in inflation, doubling down against the companies which will essentially crash in inflation, and ARK is now a part of this ball game. And the bottom line here is quite simple. Obviously, Michael Burry thinks that Tesla is garbage. It is what it is. But More than he hates Tesla, he knows that this company will not fare well in inflationary times. I think that's the main thing that drives him, not the hatred for Tesla or Elon. I think he knows that if inflation comes, Tesla will be suffering, like PLTR, like a lot of these tech companies. That's why he's betting against ARK, and that's why he's betting on CVS, Walmart, Facebook, Google, and that's why he's putting against the government bonds. And him doubling down on this means one thing. He's cocking it back even more, basically. It's about to explode. Essentially, here we are at this juncture. I think Michael Burry is telling you, hey, I think, not me, not Tom, Michael. He's saying, I think that inflation is literally about to pop. That's why he's doing that. Now, whether he's right or wrong, who knows? I'm just a guy on the internet. I'm not a financial advisor. I'm just a guy with an opinion. So it might be inaccurate, might be wrong, might be the ramblings of a madman. You got to do your research. You know it. I mean it. Now, other news that I want to share with you is actually quite alarming. More of the same. Look at this. Shanghai closes down 2% as China continues regulatory tech assault. SEC warns of investment risks. So China is basically, after saying, hey, we want to communicate better, are going out on another rampage. I'm not going to go through this. Obviously, you can read the article, but more restrictions, more regulatory concerns. It actually prompted the response from Gary Gensler. Look at this. Meanwhile, SEC Chairman Gary Gensler issued his most direct warning yet about investing in Chinese companies. When American investors think they're investing in a Chinese company, it's more likely we're actually investing in a company in the Cayman Islands. In certain sectors like technology and the internet, the government of China actually doesn't allow ownership and investment from people outside China. To get around this, China, blah, blah, blah. And in case you missed the previous episodes, this is exactly what's been going on. China went on a rampage, essentially canceling Didi, then going at Tencent. Then Gary Gensler comes out and says, hey, this is getting ugly. Chinese basically come out and said, well, we want to communicate better. We want to communicate better so we can solve this in a way of peace. And then they go back at it. Now Gary Gensler is pissed. He's basically going to the video saying, hey, this is risky. No more Chinese IPOs until further notice. Things are not looking good for Chinese stock. Now check this out. We are on fire. 5 US states set new records for COVID cases as hospitalizations rise. Now, I'm not going to read through the article, but I will tell you one thing. I've been preaching about this for a while. I think COVID ain't going away that easy. It's a big problem that still needs to be resolved. And I think this Delta variant is basically rolling back some of the reopening. And the same thing can be found in the Walmart and the Home Depot stuff. Look, the reopening isn't going to happen that fast, especially with these new variants. So just make sure you understand this new situation, because this is going to create a lot of opportunities in pandemic-friendly areas and categories which you need to identify. Now, I do want to show you this. Peter Thiel-backed crypto broker Bitpanda triples valuation in 5 months to 4.1 billion. Now, it is still a private company, but they did triple the valuation based on their latest round, and it is involving Peter Thiel through one of his companies. But very interesting that Peter Thiel is already working on his new pet project. It's essentially a brokerage for crypto, and also they do some white labeling for banks and institutions, a lot of licensing income. Also, they do basically spreads, not order flow. Very interesting. They might actually be legit. Let's see what happens with this. It seems that Peter Thiel is cooking something new. Always exciting. Now, the other stuff I want to show you is Home Depot actually going crazy in earnings. Same for Walmart. Now, the reason I'm showing this, it's not because I care about Walmart or Home Depot. I mean, I'm not a huge fan of these companies, but this means one thing. When these commodity sellers, the retailers, especially guys like Home Depot, which sell to a lot of home builders, especially Walmart that sell a lot of commodities and goods, when they go up like this, it only means one thing. Inflation is creeping up. More expenditure on commodities means more inflation, more growth. Again, another sign that we have inflation actually creeping up while COVID is actually making a comeback, which isn't a great situation, but every situation, good or bad, creates opportunities. And every crisis creates opportunities for investors to actually do make money if they're smart. We don't have to day trade, we don't have to swing trade, but we can actually take a look at this and try to identify which trends are coming next. With inflation creeping up, a lot of commodities will go up. There's a lot of cheap ones out there right now. I've been talking about this for months. A lot of videos that I did about that. Also, a lot of pandemic-friendly stuff, like Zoom, for example. I think Zoom is actually very reasonably priced with what's going to happen right now. A lot of news coming out that actually is giving you a sign about what's to come. Just listen to it, make your own decision, decide for yourself. Thank you so much for the channel members and the Patreons. You guys are amazing. Thank you so much. We do have a Zoom call coming up this Thursday with the Patreons and channel members. If you sign up by then, you can participate $5 per month and you'll be supporting the channel. Thank you so much. We'll see you tomorrow.